Hey everyone, I'm your host Tom Shaughnessy and welcome back to Chain Reaction, a research-driven podcast that's a part of Delphi Digital. If you're not on Delphi's research portal, you're missing out on the critical analysis read by the top minds in the crypto space, so be sure to check it out. One quick housekeeping item, nothing said on this podcast is a solicitation to buy or sell any security or token or to make any financial decisions. I may personally hold tokens mentioned on the podcast, and you can view our show notes below for our complete disclosures. With that, let's jump into the episode. Hey guys, I wanted to tell you about our new sponsor, Crypto.com. Crypto.com's exchange is a rapidly growing trading venue with a strong retail flow. Top institutions can receive a credit line and highly competitive maker-taker fees. Their platform is robust, secure, and compliant. You can get started trading today on the Crypto.com exchange, and to get in touch with their institutional sales team, visit bit.ly/CryptoDelphi now or click the link in the show notes. Now back to our show. Hey everyone, welcome back to Chain Reaction. I'm your host, Tom Shaughnessy. Today I have on Dan and Rob from HXRO, co-founders of the platform. How's it going, guys?
Great. Thanks for having us.
Yeah, of course. So full disclosure, we did work with you guys in the past. It's on our transparency page on our website. We had a blast doing so. So this will be a fun combo because we're up to speed. So Dan, let's start with you. Give your 30-second intro, man.
Sure. Dan Gunsberg, go by Gunny Hero, Gunny, Hero BTC, whatever, across different social media platforms. The co-founder and CEO of HXRO. Been a trader been in the business for close to 25 years now, and a trader for more than 20 years, and founded HXRO with Rob and kicked it off in mid 2018, and here we are today.
Love it. Rob, what about you?
My name is Rob Levy. Really a pleasure to be here. I was a options market maker for about 15 years in Chicago, both at the CBOE and then at the CME. And I went from trading and making markets in corn, the yellow corn, and then moved over to the new corn, which is a pretty funny thing, especially with all the farming that's going on these days in crypto.
Yeah. It's so different, but the name's the same. So you guys are two of the few guys I know that have like decades of Wall Street experience coming over to crypto. Like I could count on my fingers the number of people I know that kind of did that. I'm sure there are a lot, but you guys, I mean, most people I think in your positions would just stay on Wall Street, right? And kind of just do that. But you guys actually moved over.
You know, we like to call it more LaSalle Street just because it's Chicago, and there's that unwritten rivalry between Wall Street and what goes on in Wall Street and kind of the derivatives landscape in Chicago. But you know, I got into crypto in 2015 while I was a chief operating officer at a fairly large prop firm, and the writing was on the wall very clear. Like when I looked at it, there were so many similarities to what was going on in the early tech days. With what you saw kind of in the NASDAQ tech boom. And, both on the technology side and the advancement that was going on relative to what was going on in the rest of the world geopolitically and everything else, with, what kind of the opportunities that were existing from a trading perspective. And so we were getting active there pretty early at our firm, and I looked at it and just was like, man, the writing's on the wall here. And this is a perfect opportunity to get into something relatively early. There was so much opportunity in that market at the time, just even from arbitrage to just directional trading, every which way you looked at it. And it just made a lot of sense to go. And my take on it was, if I'm going to go at it, like, I'm going headfirst into the deep end. And Rob, who was market making an agricultural book at our firm at the time, we had talked about crypto quite a bit. And when he found out I was leaving the firm, he hit me up and we connected. And he was ready to take the plunge as well. And next thing you know, we were we rented a little coach house from someone that Rob knows, and that's up near us where we live, and had our screen set up, and we were aping away. So
that awkward water cooler conversation. You're quitting, man? Oh, I'm quitting too. Let's start something.
Totally.
It is funny though, because it kind of at that point in time, it was pretty much a no-brainer. As a market maker, the markets in the legacy land and ag options and the CME products and SIBO products, the markets became so tight. Mm-hmm. I mean, it really was pretty much overcapitalized most of the time during most of the conditions. And with efficiencies like that, it becomes the space race and really a balance sheet race between the top entities in the space. And in crypto, it was kind of the opposite. It was definitely far from overcapitalized. I would say very undercapitalized, very fragmented markets. And for professional market makers, that created opportunities and edge. And that's, for us was like, holy cow, there is so much edge here. We got to go.
I love that.
Yeah.
No, that makes a lot of sense. And guys, before we dive back in, let's just go over here real quick for those new to the story. Like, what exactly is Hero? If I'm a user, what can I do with it? And how's traction been? Let's just set the stage there and we'll go back.
Rob, go ahead.
Hero, in my mind, and being birthed from sitting with Dan in this coach house trading crypto and really diving in, we had ideas and dreams of creating a new way to play the market. We grew up in the market. We were what we would call locals on the trading floor and the trading pits. We experienced the true game and true sport of the market. And when you do that for 15, for 20 years, and all the experiences of it, and that's both experiences with others in a physical trading pit, and then through the evolution to now you're not really face-to-face seeing the people you're trading with. It's literally digital zeros and ones. So we lived through that, and it gave birth to these ideas of a new way to play, because we knew that the market really is the biggest game in town. And everything we've seen over the last even year, it's proving that out. So we had ideas for great, engaging, exciting ways to play the market. And we said, we're going to bring these to life. And that's what we did.
That's awesome. So if I want to play the market on Hero, what exactly do I do? Do I need like Ethereum or Bitcoin? Which way am I betting? Just for people new to it, like how exactly do I use the platform?
Yeah. So first of all, prohibited in the United States and a couple other jurisdictions as well, unfortunately. But we don't, as we say lightly, we don't make the rules. So
Moonrect is a very simple product. It's a peer-to-peer pari-mutuel market that only requires the trader to determine really whether or not the price of the index, the underlying index, will be higher or lower at contract expiration relative to the open. The basic concept behind pari-mutuel markets is reasonably straightforward. All positions taken in a Moonrect contract go into a contract pool. The potential payout on your position is dependent on two factors. One, the amount of the total position in the pool, and two, the total amount of the positions that are on the same side as you. At expiration, the winning or the in-the-money side splits the pool pro rata based on your position size relative to the other in-the-money positions. Because the total position of the winning side may be a larger or smaller percentage of the pool, your payout multiplier will vary. As an example, if there's a total of like 1,000 units in the pool with 200 units on higher, which we call Moon, and 800 on lower, which we call Rect, and Moon finishes in the money, then the 200 units on Moon will split the total pool of 1,000 units. This means that Moon is paid roughly 5-to-1 on their money for that event. Because payouts are not fixed, and it ends up creating this neat little sentiment layer in which the trader is not only trying to determine whether the event will finish higher or lower, but in many cases they're also trying to determine the value of fading what he or she thinks is the side with the larger percentage of the pool, since this would give a greater bang for the buck or payout multiplier on their position, since the multiplier would essentially be much higher.
Got it. So just to recap, people go on the site, there's standardized time frames, so they could enter games that are 1 minute all the way up to, I think, a day. They choose higher or lower, and the starting price is basically the when it began or the end of the last contract, and it's all peer to peer. I guess my question for you though is, let's say you have a 15-minute game, and I come into the game 5 or 10 minutes after the start of it. The payout has to change, right? The payout's pretty dynamic because you have people constantly entering on either side.
These are just, you have to have your entry in before the candle starts. And then there's no entry when it's live. So it is, you're choosing for those specific time frames if it's going to close higher or lower. And there's no changing position.
Correct. You put it on prior to the opening of the event or opening of the candle. And then after that, once time equals 0 at that point, everything is locked. And then it runs the entirety of the event. And at expiration, when it closes, it determines which side has won the pool, and then it splits it out pro rata.
So the peer-to-peer nature is awesome. I mean, it's right in the line of kind of crypto thinking, right? I mean, you don't want to have to trade against the house or an exchange or anything like that. You want something where it's just you versus other users.
Exactly. And it becomes this, this type of sentiment gauge as well. And when you watch it, you can you start to see which way the crowd, the pool of users are leaning. When, in a bull market, you could see that it might be heavily leaning towards Moon. So then you would have a better payout on rect, and you can choose times to take rect when, you're looking at the chart and you think we're about to pull back. So it really creates another layer too, where you can build strategies and look at sentiment, and it's a great mechanism.
Back to Wall Street, guys. If there's a 10x payout and a 30% chance, you take it, right?
Pretty much.
Exactly.
Part of the game of it, in its current iteration, is it's got this other dimension of anticipating sentiment. So there's these interesting kind of trading elements to it of, because you can't see how much is positioned on each side of the market prior to the open. You only see the size of the pool. So you have to have some idea, because you're really incentivized on many ways to, at certain points, to kind of be on the fade side of the market, like against the crowd, which maybe should theoretically have the lower probability payoff. But if you're valuing it to say, well, no, my system or my charts or my gut or whatever is saying that I've seen this play out a million times before, and I think the market's all going to be pushing for this to continue to go lower, but I actually am willing to fade it. There's been instances we've seen guys, take on side, and you'll have thousands of, let's say, hero or whatever on one side of the market, and it's literally like two guys with small wagers on the other side, and they bought themselves a lottery ticket effectively. I think the largest one I ever saw was like 170x in a 5-minute event.
Wow.
And the guy won it. Yeah, it was insane.
So who exactly is using Hero? Is this like retail speculators? Is this like hedge funds coming on and saying, hey, look at the day game, the payouts are this way, so we could kind of use this to gauge sentiment? Or is it people looking for more of a predictions market approach? Like, what's the breakdown that you're seeing for usage on the platform?
I think all of it right now. If you're, what we're seeing is that users that, we've built a UI and UX, and we're consistently iterating on that towards a global retail first audience. And really that's about increasing engagement and making a more palatable environment where it's not quite so intimidating or so raw for the average retail user, and also making that potentially a soft way to onboard more users into crypto, and approaching it through that game element. When you peel back the layer of it, there is a lot of sophistication under it and the types of products that are run. and there are plenty of very sophisticated trading desks that are looking at it, going accessing it through our API. They really don't taking care one way or the other about the front end, and using it legitimately as an alternative liquidity touch point against a larger trading portfolio.
Wait, so people are using Hero without using your UX?
Yeah, they just access it through the API. And there's guys that are running, there's lots of accounts that are, that are running small to medium sized positions on like every single event. Like in Bitcoin alone, there's 1,440 events on a 1 minute, and they're just playing a numbers game. They're they think they have an edge, or they have an edge, and it could be just on a idiosyncratic basis specific to the risks that are presented with this product, or they're running it against multiple other products. It could be against some other types of vanilla options or perpetual swaps, or interplay that Rob kind of mentioned earlier. What we see a lot of is guys using shorter timeframes and then putting them against longer timeframes and extracting edge that way as well.
That's awesome. And how has usage been on the platform? Like, how do you guys look at? Do you guys look at daily users, monthly users? What do you guys look at there to kind of gauge uptake? And any recent events that we saw more usage on your platform after you guys dropped V2. So I'm wondering if that was the driver there.
Definitely a good driver there. We've made a more concerted, after we launched V2, we've made a little more of a concerted effort on the marketing front. We haven't fully deployed our marketing in full force yet. We're in the process of ramping that up right now, and what we mean by that is more push towards Southeast Asia and some other jurisdictions. But we saw a significant increase, and it's on a relative basis to a large spot exchange. It's not necessarily apples to apples, but our DAUs are running in the low 4 digits, which is really good for us right now, and our weeklies are into the mid thousands, and we're seeing month over month, week over week, month over month, just a slow increase in users. And it doesn't necessarily equate to, it's really easy to tell kind of who the more retail driven audience is relative to the ones that are maybe could kind of tilt the market a little bit more, because you will have a lot of you have many periods where you'll see a lot of new users come on, but they're very small.
That's fair.
They're kind of like, trading at table minimum. And then suddenly you'll see a big spike in volume, and you'll see, okay, well, this new API user just came on and they're running some types of strategies. And it's very much like, it's got the same Pareto principle, from a volume perspective as an exchange, where 10%, I'd say even less than 10% of the users are probably generating 90+% of the volume.
Jesus. Well, so before we get into the other side of your platform with the token and that side of things, last question for you guys on the usage side. What's the biggest risk to getting users, or what has been the hardest thing to overcome to attract them? And I guess if you guys could maybe compare to some competitors in the space and how you view that is interesting, because there definitely is a critical mass you want to reach, and it's not easy to get users in crypto.
Yeah. Rob, you want to take this one?
Yeah, sure. To start, we really, with this, a unique product, we've had to bootstrap liquidity. Parimutuel, like the parimutuel nature of this, there is no central limit order book. There are no big high frequency traders that are, flashing orders and kind of dominating this product. The peer-to-peer nature of it makes it a little more difficult and laborious to build this network. And so we knew that going in, but the bottom line is we with Moonrect, we wanted to have the most fair and transparent product that anybody can come in. They see that the index is, an aggregate of constituent exchanges. We show the timestamps of all the settles, everything. This peer-to-peer nature, fair. You're not racing. Your orders aren't getting raced, front run. You're not competing in those flashing books. So, like Dan said, a lot of smaller users, and takes time to build up pools to where anyone can come in at any time of the day. And if they think Bitcoin is going to go higher in the next 5-minute candle or 1-minute candle, they can enter a contract with confidence that there's going to be volume and I'm not going to get screwed over. This is as fair as it gets. So we chose to go that way. We get that question often. Well, why'd you choose to do that? And because, crypto really opens the doors to building unique liquidity pools. And we saw that opportunity, and that's where we went first. We've got some really exciting products that are going to be coming to market shortly that, it's going to broaden our product set from Moonrect into some other exciting instruments.
And so, Rob, basically what you're saying is that when you guys first started Hero, you really couldn't get involved in these games in size because there just weren't too many people getting involved.
Correct. You need to introduce this product. You need to get people to play. We had a private beta that quickly exploded into, people really trying to get others in. And this was at the beginning of last year. And it moved from private to less private. And then when the token got listed, it changed things. We had credited people with this sandbox of tokens to really check out the product, give us feedback, help find bugs. And it went so well that we knew we had some product market fit there. And then it really, the most active players, they felt this was a tremendous way to trade the market. Some of them stopped trading like futures and spot and like perps altogether and just focused on this. It's been a community-led movement, and now it's great to see that a lot of the most talented trading desks in crypto are jumping in and getting involved and see the powerful nature of the product.
Hey guys, I wanted to tell you about our new sponsor, Crypto.com. Crypto.com's exchange is a rapidly growing trading venue with a strong retail flow. Top institutions can receive a credit line and highly competitive maker-taker fees. Their platform is robust, secure, and compliant. You can get started trading today on the Crypto.com exchange, and to get in touch with their institutional sales team, visit bit.ly/CryptoDelphi now or click the link in the show notes. Now back to our show. So, Rob, one of the crypto native things that get discussed a lot, like you run into a lot of issues in crypto because we don't have great scaling, like Ethereum's insane fees. Like I've been paying, I think I paid $100 or $200 for a transaction last week, either on Curve or 1inch, I forgot. But so you guys basically have a centralized UX. So you don't have to worry about like fees or front running and things like that. But in the transparency of crypto, we just discussed how everything's peer-to-peer. How did you guys decide to do the UX centralized versus doing it on chain?
At the time, we really couldn't get it done as quickly as we wanted to if we wanted to do fully decentralized. And when we were really in the nascent stages, we had just experienced the CryptoKitty, Ethereum clogging network mayhem. And we looked at ourselves multiple times and just said, we can't get this out as quickly as we want in the form if we do it decentralized fully. The goal was to get it out, get MVP out, find our product market fit, and then, move towards more decentralization.
Sorry, Dan, go.
Yeah, no, I was going to say a lot of it is the technology around DeFi. Like our use case is very commercial in many ways. We're proving out concepts with unique products But our initial take on it, in part of our business, was that our goal is to really bring this to a much wider global audience, even outside just the existing crypto community. And in doing that, it's important for us that we keep a balance of introducing more DeFi as the technologies improve, as the costs become less prohibitive, and give us the ability to do it at scale. We are working with a couple of other, with a couple of protocols and a couple of platforms who are heavily involved in the DeFi space to do some, to evolve and to iterate towards a more DeFi platform. And
so Dan, but just to dig in there, like it just seems really hard to build pari-mutuel pools on short-term horizons on chain if you have to pay fees. Like, how can you build liquidity on 1 or 5 or 50-minute pools if you got to pay $50 gas fees? Like, even if you bet $25 and it's a 2x payout, you're boxing out all the retail if you're doing it on chain.
It's what we're working on solving right now.
Got it. All right, that's cool, man. Yeah, no, I love crypto, man, but I mean, certain parts just make sense to be centralized, and I don't, people just brush that off, but it's just true.
That's definitely the case in a lot of respects.
So, guys, let's switch gears to close out the pod. Let's discuss your token and the LP dynamics. What exactly is the Hero token used for? Rob or Dan, either one.
Oh, well, yeah, no, I can talk about the token here. The token's it's not available for US people, but the token itself, it really drives the platform and it drives the liquidity. We talked a little bit earlier about the difficulty in building liquidity pools for pari-mutuels, especially ones that run perpetually and on short time frames. So the liquidity producer pool staking model, it plays a really important role in building these perpetual liquidity pools. The stakers, they share in the transaction fees that are generated in MoonRec contracts. And that's a big share. They're earning rewards that are tied to the growth in the network value. Currently, about 72% of the entries into MoonRec contracts are made in Hero. So our users are overwhelmingly using Hero on the platform. There's been a lot of our guys who have tweeted and said, I mean, Hero is the only token that I use every single day of my life. And it just shows how our users look at it. And they earn rewards in Hero. The more they trade in Hero, the more rewards they earn. The more Hero that they have in their platform wallet, they earn larger rewards. Because the nature of the product is that the more entries you have, the more transactional volume, it's a better user experience for everybody. The pools get bigger, they're bigger more consistently around the clock, and it's just a better user experience. Yeah. So that was, at the heart of the Hero token is improving the platform user experience, and the liquidity producer pool mechanism came about to really bootstrap early and get it robust early, and then also make it sustainable, where our biggest users, they're sharing in the growth of the overall network value.
Got it. That makes sense. So switching to the one level further on the Hero token, you guys have a fee structure to use the platform. A percentage of those fees flow to LPs. Can you guys explain who your LPs are, what exactly they get from the platform, and why someone would want to be an LP on Hero?
Sure. So the initial round of LPs largely has been mostly trading desks who are in the process of becoming more active on the platform. And so they're, as Rob said, they're earning a percentage of the network transaction fees. in exchange for that. And then they're also earning. So what they're also earning the ability to unlock more significant volume tiered incentive rebates on the platform as well. So when we looked at implementing the liquidity producer model, we actually referenced. It's funny because like the whole everything with liquidity mining and everything that's going on in the space right now that's been very hot. It's very new to crypto, but you actually can kind of look at like the incentive schemes that exist on legacy exchanges and legacy derivatives exchanges, like the CME, for example. If you're a retail user on the CME, to pay to buy an S&P 500 futures contract, it could cost, I think, upwards of $3 and change to do that, not including what you're going to pay to the that's just going to the Merc and not what you're paying to your FCM and whatnot. But once you have a seat on the exchange, or you're under an entity that owns the required amount of seats to trade on member rates in that complex, then your fees automatically reduce drastically. That's one. The second thing is that volume in the legacy exchange space is so heavily driven through rebate models and through liquidity incentive models. If you went onto the CME and looked at their volume tiered incentive rebate schemes for members, some of them are insane, and you really understand how liquidity really gets built at a massive global level on what is effectively the largest, most voluminous exchange on the planet. And we took a lot of those concepts, simplified them down so basically the average trader could understand them, but created these incentives. And then the LPP is really the equivalent of the seat. The second you have that, you are getting this level of participation in the network. And so we constructed that model, and and started talking to a few desks about it, and it went off great. I mean, somewhat expected, most of the very trading focused desks literally got it in a matter of minutes. And we ended up talking to a lot of VCs about it as well, and who were maybe who had trading desks, but the approach was a little bit different. And most of the guys who were just hardcore trading desks, they scooped it up pretty quickly.
So Dan, just to recap though, before we go forward, how many tokens do you need to have a unit, and how many units are there? And just so people are aware, a percentage of your network fees, which you guys get for the games, are flowing to these seats.
That's correct. So in the first tranche, in the first release, there's 100 total units or seats that are available. We allocated 80 of them in this initial launch, and then each unit to own one unit, you need to stake 250,000 HXRO for 1 year. And then that would give you the rights to the unlocked incentive rebates, plus give you the pro rata rights on the transaction fee share. So we took 80 units, which effectively is about 20 million tokens. Those are locked up for 1 year. There's another 5 million, which is 20 units that we are releasing. We're in the process of building right now to the platform and releasing it for community staking. So that will soon be available to our user base on platform. And you have 25,000 HXRO in your wallet, and you want to stake half of it or some portion of it. That you'll be able to stake for a fractional LPP unit. It won't give you the complete rights of being a full unit or above holder, but it'll give you participation in the network fees and some other incentives as well.
Got it. That makes sense. And Rob, we were talking offline the other day kind of about how this could make for a virtuous cycle, right? So let's take the optimistic case here. How does the LPP program create that cycle? People or LPs acquire HXRO, they get discounts, they use the platform more because they're getting discounts. So that drives more users because it's more liquidity. And then in that case, there's more fees, there's more incentive to be an LP. Are you guys actually seeing that play out, or is that theoretical?
We are seeing it play out. We are seeing desks that really they hadn't ever used the platform before talking about the LPP, and they love the model, they recognize the model, and they started onboarding and trading through the API. So we are seeing it in action, which is really exciting. And it's that cycle you talk about. It really builds more depth throughout. Like, it's a 24/7 market, and it really builds depth because the firms that are gunning for rebates, there's 1,441 minute contracts for Bitcoin, and we're seeing more and more people enter every single one, and that is the benefit. That's part of the flywheel, and it keeps it going. I mean, there's guys. It's like I call it kind of like a new type of money ball, where they're trying to bat 550. If they can come up with a 55% win rate on a 1 minute contract in Bitcoin, they're firing away, and they're playing math of how big of a part of these pools can I be? And it really is, tying it into these standardized timeframes and contracts. It really aligns with their technical analysis, and they can generate signals every minute, every 5 minutes, every 15 minutes. We're seeing that on some really unique platforms. There's a couple of early hero traders who started this site HeroBot.io with some really unique ways for hero traders to automate their strategies and test the hell out of their strategies. And really, it's a numbers game. And when it's standardized like this, every minute, every 5 minutes, there's no slippage in the order books. There's no stop losses and everything. A lot of the variables are controlled, and to me, it's easier for somebody who doesn't have the backing of one of the big high frequency trading firms or big research desks to create strategies that they can test on small amounts and create profitable trading strategies.
Yeah.
And Rob, last question on that. How exactly do you back into what LPs are earning on like a yield basis? We don't have to get into like dollars, but I mean, the denominator is obviously the cost of getting a unit and how many units you have over the fees to LPs. And then that, I mean, depending on how many units are out there, right?
Correct. Yeah. So let's say there were 100 units. The cap for this first year was 100 units. It was a 25 million token cap for the LPP. So a unit holder would be one of the 100, and he'd be 1% kind of share in that pool. So we share 33% of the net transaction fees with the LPP every month. And I believe this last month we distributed somewhere around 500,000 hero, and then more Bitcoin, over a Bitcoin to the LPP. Depending on where they bought their tokens to stake, to lock up, I think it was somewhere close to 50% annualized yield.
So guys, we talked about the whole platform, user growth, and the LP side. Super interesting. You guys have a lot of great usage. I love V2. Before we close out, let's just take the other side real quick. I mean, what's the biggest or constructive risks you guys are tackling to Hero? Like what, not what could put you out of business, but like what's the, things that keep you up at night? What are things you're trying to overcome? What's that side like?
I think that when you think about just the evolution of the market, and we did take a kind of a step out with a unique product, we could have very easily at that time launched a simplified vanilla perp or something similar. That created a lot of additional, I guess, risk for us, but we were really looking to plant our own flag, and not even so much as like as something to be in direct competition with some of the larger players, but to really be a great addition that could be, again, this alternative way of attacking the market that is actually complementary to some of the kind of the more main pillars in in crypto trading. So just the wrap. I would say one thing is like the space evolves so fast, and the attention span of the users is literally, it's incredible, and it's actually moving even faster and every day. And so making sure that we are constantly iterating at a pace that is staying a couple steps ahead of of what's currently in market and what's currently working and not working for us, that we're always looking to add or iterate towards newer products, towards better ways to working with our user base and to grow. Obviously, there's a lot of keep very close eye on regulatory developments, and that's always something just with crypto in general that has to be navigated carefully, and something we work very hard on internally. And those are the real elements to me. And I think at the end of the day, like, there was probably some point when we started and we were like, well, we could wake up tomorrow and crypto could be gone. I don't think that's the case anymore. I think that it's here, and I think that it's starting to pull the strings of the world beyond the scope of the bubble, and the bubble is just kind of getting bigger every day. And the funny thing is that what really drives that at the end of the day is price. And you just can't argue with the fact that having Bitcoin at 20,000, like, the amount of interest that it gains being at 20,000 is multiples than when it's at 8,000 or 10,000 or even 14,000. And so I think there's some level of, like, kind of just general market beta that we see, and we want to make sure that those things are moving forward. And it's one of the reasons we built early, and we built during a hell of a bear market, was to be able to really ride that wave and be part of the rising tide as crypto goes through its next bull cycle, which I think is coming. So
awesome. Yeah, it got a little dark a couple months ago, so commend you guys for building through it.
Interesting times for sure, man.
Yeah, man, it got deep when you're texting your friends. Are you buying to 4 or 5K, or are you quitting? Well, guys, this has been a blast. Tell people before you leave where they could check out Hero, or potentially sign up to your blog and stuff like that.
Yeah, you can Hero. It's HXRO. We pronounce it Hero. .io. We're on. You can keep up to date with us on Twitter it's at real HXRO. We have a content site that is really more analytics, news driven. That's an offshoot of Hero called Hero Labs, which is HXRO Labs. That's at Real Hero Labs on Twitter. And then in Telegram, we have a Telegram channel via Labs called the Trading Pit, and which has rapidly become the crypto version of Wall Street Bets for degenerate shitcoins. So it's been a blast, kind of having the ape army that we call it, kind of growing there, and they've really taken to what's going on in the market. The kind of the current things that are hot in terms of the development of shitcoins and kind of the Uniswap generation that's spinning up. So,
hey man, people laugh, but you need a community, man. Whatever it's called, you need one. It's good.
That's it. Look at part of our, like we said at the beginning, like, trading's a game, and it can be treated, professionally. It can be treated as a gamble, and one thing that it can do to everybody is bring out their degenerate spirit. There's no doubt about it. You can't avoid that, and we're not going to lie to ourselves and pretend that doesn't exist. So, why not make the most of it?
I love that. Well, guys, thanks so much for your time today. Can't wait to share this one.
Thanks, Tom. Really appreciate being here, man.
Yeah, appreciate it.
Hey, everyone. Thanks for listening to the podcast. If you enjoyed it, please support the show by hitting subscribe on iTunes, writing a review, or sharing this episode on Twitter and LinkedIn. And stay tuned for our next episode out soon.